My name is George Hall. This lecture is for a fiscal history of the United States. It's on the web of World War I debts and reparation payments made during the 1920s. The 1920s are a fascinating period in international finance. Like most of the Allies, Britain and France borrowed heavily to finance their war effort. Many of these loans were made by the US to Britain and France. And so at the end of the war, Britain and France owed considerable money to the United States. As part of the Treaty of Versailles, Germany was required to make reparation payments to France and Britain, which Germany claimed it could not afford. Now, Britain and France claimed that they needed these reparation payments, however, to repay the these US loans. So what the US did was it lent money to Germany so that Germany could then make reparation payments to Britain and Britain and France could in turn service the war debts owed to the United States. This circular flow of funds continued throughout the 1920s into the early 1930s, when it came to a halt in the middle of the Great Depression, or at the start of the Great Depression. When Hitler rose to power, he turned around and defaulted on Germany's obligations to the United States. And when he defaulted on these obligations, Germany owed the US more than Germany had paid in reparations. So that when you net out the accounts, Germany actually came out ahead in this circular flow, and the US came out well behind. There was a significant transfer from the US to Germany as an outcome of these flow of funds, despite the fact that the US was on the winning side of the war and Germany was on the losing side. So our story starts at the end of World War I. So during the war, well, I guess it starts during the war. During the war, each of the belligerents financed their military expenditures with a mix of taxes, money creation, and borrowing. Each country borrowed heavily. If we think about the ratio of borrowing to taxes during the war, Germany's ratio of borrowing to taxes was 8-1. In France, it was 7-1. In Britain, 4-1. And for the US, it was about 3-1. The Allies borrowed heavily from the United States. Many of these loans were intermediated through Britain and France. So the US would loan money to Britain and France would in turn lend that money off to countries like Italy and Greece and Finland and those sorts of countries. In contrast, German war debt was largely domestic. Germany was poorer than the Allied nations, but it was richer. It was the richest of all the Central Power nations. So much of its debt was domestic, and it loaned money to the other Central Powers. Now, much of the war took place on the Western Front. It took place in France, and on the Eastern Front, it took place largely in Poland, what's now Poland and Russia. So there was little actual wartime destruction or combat destruction in Germany and Britain. But despite that, Germany and Britain, like the other nations, was largely spent. Very little investment had gone into their factories and plants and mines. And so essentially the economy was essentially worn out. And immediately following the war, there was a near collapse of the European economy. So this table shows the interconnectedness of debts across the Allies. It's in millions of dollars, and it's at the time of the armistice, so it's the end of 1918. This is at the end of 1918. You can see that Belgium owed $172 million to the US, to Britain $422 million, and to France $535 million. And some of those loans to Britain and France may actually have been ultimately go back to the US. France owed money to the US and Britain. Great Britain owed money to the US. Now you can see Greece owed money to Britain and France. Some of that may have actually be flowing back to the United States. But you'll see that many countries owe money to other countries as well, and that there's a considerable debts owed both to the US, to Britain, and to France. It became immediately clear after the war that the Allied countries would continue to need to borrow. Their economies were in shambles after the war, and there was really no chance of repayment immediately after the war. In fact, they were going to need more borrowing and more funds. So the U.S. government continued to lend money to these governments, these other governments. You'll see that, the post-war lending to countries like Belgium, was essentially the same as for pre-war or during the war lending. But there was considerable loans made to these countries even after the war ended. Some of these loans were in the form of credits for supplies that, the U.S. had shipped a lot of supplies over to Europe, and rather than ship them back, simply sold them to Europeans at credit, exchange of credit. So there was essentially $10 billion in loans, of which, a quarter of those were made after the war ended. Now, it was very clear after the war that the Allied nations would not be able to repay the U.S. anytime soon. And so Congress sets up a commission in 1922 that's led by Treasury Secretary Andrew Mellon to renegotiate these debts. The goal was to refinance these loans into loans with a longer maturity, so to extend the maturity, to refinance short-term debts into long-term debts, and to reduce the coupon payments, to reduce and postpone the interest payments. They were so many of these loans were refinanced into loans to a set of payments that would be made over 62 years. And it was implied, though never explicitly stated, but many left that conference with the idea that sort of after 1942, after the US Treasury had paid off the last of Liberty loans, these loans would be forgiven. There was some expectation of that. So if you look at the face value of these loans, so in this table, what it tells you is, it tells you the face value of these loans. And then many of these loans, so for example, Belgium, for example, owed $417 million to the United States. And under this new, they were given a new, under the new cash flow that came out of this World War Debts Commission, the interest rate was cut substantially. If you take a look at compute what the present value of that cash flow would be at, say, current interest rates, which were running about 4.25% at the time in the United States, the discounted present cash flow of the new these new loans was only $225 million. And so in terms of marking to market, this is a reduction. The market value, or the present value at current interest rates, represented a sharp haircut in these loans. The market value of that loan is only 54% of its face value. Great Britain's loans were refinanced at a 3% interest rate, at a 3% coupon rates. And those coupon rates they'd be 3% for the first 10 years and 3.5% after that. For many countries, however, the coupon rate was quite a bit lower. France had a 1.6% coupon rate, Italy 0.4%, and you can see that essentially the write down in Italian debt, and market value or the present value of the new stream of promised payments is only a quarter of the face value of these loans. If you take the average, the markdown in debt is about 40%, or sort of 40% haircuts relative to the face value. German reparation payments were set as part of the 1919 Paris Peace Conference in Versailles. Article 231 of the Treaty of Versailles stated that Germany would accept financial responsibility for the war. It was not going to be an immediate payment. That was to be worked out later, but it was to be treated like another debt. And as part of the treaty, they created a reparations committee, which would then become the London Schedule of Payments that would meet in 1921. There were sort of three arguments for reparations. None were particularly high-minded. The first was that the war was Germany's fault and that they should pay. The second argument for reparations was that these European allies were deeply in debt to each other. The idea that one would default on another was seen as out of the question. But paying off Allied IOUs without reparation payments was basically politically infeasible. The US was opposed to these reparation payments, but Britain and France would say, well, then, will you be willing to forgive our debts to you? And the US says those are completely separate issues. Of course, Britain and France did not see those as separate issues. And so if they were going to repay the United States, then they were going to expect Germany to help to pay them. There was also considerable past precedent for indemnities imposed after a war. This is just the way European wars had been settled in the past. Germany had imposed a large indemnity on France in 1871, and Germany, in fact, had imposed an indemnity on Russia just in 1918 in the Treaty of Brest-Litovsk. So that was just the way wars, got settled. John Maynard Keynes was very much argued against these reparations in his book, The Economic Consequences of the Peace. He pointed out that the treaty did not set a fixed amount of what Germany was owed, and there was no criteria set in the treaty to determine what could Germany pay. Furthermore, it also included costs that had never been such as pension payments to war widows that had never been imposed, had been counted as a cost of war in previous wars. So in 1921, there's a settlement. There's a conference in order to set the schedule of payments for these reparation payments. They're originally set at 132 billion gold marks. That's $33 billion, or $465 billion today, and it's in three sets of bonds. There were A bonds and B bonds totaling 50 billion marks, and then the other remaining 83 billion were in these C bonds, and these C bonds had a particular contingency on it. The service of C bonds, Germany was only expected to make payments on these C bonds if they could bear the further burden of making these payments. Belgium's premier said, sort of laughed at this and said that these C bonds could be put away without bothering to lock up, for no thief would be tempted to steal them. He knew that these things were pretty much worthless. So you see that the majority of the scheduled reparation payments were conditional on Germany's ability to repay. This was problematic for two reasons. First of all, it created a great deal of ambiguity about Germany's fiscal situation, just how much in tax revenue would Germany need to raise in order to, were they going to have to repay 50 billion marks or 132 billion marks? Further, it also created a moral hazard. Here, Germany has no great incentive to rebound economically, because if they do, they'll just have to pay more money to the Allies. So quickly see that there's two problems here. So what did Germany pay? Well, they were scheduled to pay 2 billion gold marks each year, plus 26% of the value of their exports. And in the summer of 1921, they paid just 1 billion in gold marks. However, they did also make some reparations in kind. Those were, shipments in coal, timber, dyes, and livestock. They also transferred some coal mines and a railroad to Poland in 1921. So they're scheduled to make $2 billion in gold marks in reparation payments. And if you look at the reparation payments in 1921, they make about half of that, or about $1 billion in payments. They only make 776 million payments in gold marks. And in 1923, they essentially pay nothing toward it. They don't even, if you total it up over the 3 years, they don't even reach the 2 billion gold mark amount, that the payment they would need to make in just a single year. So Germany is very much underpays what their obligations are to be. Therefore, in January of 1923, the Reparations Committee votes that Germany was in default of their responsibilities to make these repayments. And France and Belgian troops occupy the Ruhr Valley. They essentially take over a number of German coal mines, and they're going to extract coal in payment for the reparations, and they'll do it straight from the mine head. Germany engages in a sort of a passive protest. They encourage their miners not to show up to work, and encourage other workers not to show up to work in order to, and that essentially brings the German economy to a standstill. Germany the German government fires up the printing press and creates a hyperinflation in 1923, in which it virtually eradicates Germany's domestic war debt and puts the economy in shambles. Now, one thing that Keynes points out, and it becomes another challenge for the repayment of these reparations, is that Germany needed to pay Britain and France gold, either in pounds or in francs. Now, Germany had few remaining assets overseas. One of the Reparations Commission's first actions was to transfer these foreign assets over to Allied control. Now, just think about how if Germany wants to acquire gold in pounds or francs, it has to run a current account surplus. That it has to export more than it imports. So it exports goods and services, gets paid in gold, and then can use that gold to make its reparation payments. However, during this time, most prospective trading partners imposed very high tariffs on German goods. So it made it nearly impossible for Germany to go export its goods in order to acquire gold, pounds, or francs in order to make these reparation payments. Now, it does get pointed out that Germany, instead of making payments in gold, it could have simply transferred ownership of German assets to Britain and France. To have Britain and France simply own, it would be basically turning over German assets like companies or mines, bridges, ownership of German assets. That was probably politically infeasible, though economically feasible. Here you'll see that this was recognized at the time. Here's a cartoon in the United States where they talk about, that Europe owes money to the United States in order to repay those loans. They're, for European creditors European debtors will need to export goods to the United States and import less. However, the U.S. was one of the countries that put up high tariffs, which made it difficult for European debtors to then repay, to run a current, they needed to run a current account surplus in order to run a capital account deficit with the U.S., and high U.S. tariffs made it difficult for the Europeans to run a current account deficit. So the punchline on this cartoon is, or the caption I should say, is shoot them in the pants. The code is ours, and that's the loan. So they say, blow up the imports, but don't blow up the loan with the tariff gun. Okay, so in response to this crisis in 1923 in Germany, the U.S. establishes a plan run by Charles Dawes. Charles Dawes is the former director of the U.S. Bureau of the Budget, and he forms a plan in which the Allied troops are going to leave the Ruhr Valley. He's going to raise an international loan of 800 million marks. It'll be a 25-year bond, 7% coupon bond. It ends up ultimately getting sold at 92% of its face value, so an effective yield of 7 5/8. It was organized under a consortium of investment banks under the supervision of the U.S. State Department, and it was sold internationally. So it was sold in the U.S., in Britain, and in France, and in many other countries. It rescheduled the reparation payments, so it shielded Germany from large reparation demands during the projected sort of economic recovery period. So during the first 2 years, modest payments could come exclusively from interest on railroad and industrial bonds and from a small transport tax. It, however, did put the Reichsbank under international supervision. So the central bank of Germany had a foreign supervisor. The German government was required to raise revenue, but decisions about how to transfer resources to the Allies was to be made by an Allied agent. Now, the basic idea was that, before 1914, before the war, Germany was a mighty engine of international economic growth. The skills of the German population were largely intact. And the idea was that basically after stabilizing Germany's financial situation, Germany would be able to make substantial reparation payments. The Weimar Republic had a very weak tax base, and loans to the government through the Dawes Plan would help maintain basic government functions, and loans to the German private sector would allow it to reinvest purchase much needed capital to rebuild German industry, increase production, employ people, and provide tax revenue. The German government also encouraged commercial borrowing, and it was clever. They did a couple of things. So they encouraged the commercial borrowing, and they argued that repayment of commercial debts ought to precede the payment in reparations. Now, Germany was more than happy to borrow from the U.S., partly because it was sort of a Hamiltonian strategy in a way, that by having the U.S. in particular and other countries indebted to the U.S., loaning to Germany, having the German government indebted to the U.S. and others. Now the U.S. has an incentive in order for Germany to succeed, and it has two sets of credit. Germany now has two sets of creditors. It has Britain and France, who they owe reparations to, and it also has these creditors to whom they owe loans to. They need to repay. And now you have what their hope was that their creditors, such as the U.S., by lending to Germany, would have an interest in making, in order to make sure the Americans get repaid. The Americans now, are going to be sympathetic to Germany's claim about not making reparation payments. It's a way of aligning American interests with German interests against Britain and France. There were also numerous sort of private, after the Dawes Plan was implemented, there were many private loans also to Germany, to the German federal government, to state governments, to city governments, municipal governments, and also to a variety of private companies. And again, this is the German government encouraged this borrowing, partly with the hope to align American interests with German interests in terms of repayment schedule. So if you look at these loans, you'll see that these loans from Germany, from 1924 through to 1931, you'll see about 55% of these loans, these various loans, are made from the United States. Other countries make the other 45%, but it's sort of spread out relatively dispersely, with Great Britain lending at 11% of all loans are coming from Great Britain, Holland doing 12%, and then following with Switzerland, Sweden, and others. You'll see that many of these loans are to state and municipalities. They're also to public utilities and to municipal banks, and then also to private borrowers. Those are largely manufacturing corporations in Germany. And you'll see that the US loan to all types there. Now, German payments under the Dawes Plan, Germany does begin to make payments under the, makes payments once again under the Dawes Plan. But the point, what I want to make is, if you look at this bottom column, or this bottom row, they never fully make, make payments of what they fully owe. It's always a little bit less. They they come close. It's not as bad as 1923, but they never make all the payments that they're obligated to. And in a sense, the Dawes Plan perhaps worked too well in terms of encouraging German government spending. By 1928, the Parker Gilbert, the agent supervising the reparation payments for the Allies, as part of the Dawes Plan, felt that the German government was becoming fiscally irresponsible. And so they call for a conference presided over by Owen Young, an American industrialist. And in doing so, they set yet another loan. This one's a 35-year loan with a 5.5% coupon. It was sold at a 90% face value for an effective yield around just a little over 6%. As part of the Young Plan, they also create the Bank for International Settlements. And what they do is they create another loan, and then they reduce the total reparations bill down to from 132 billion to 112 billion gold marks. But this time, what they do is they finally set a fixed, unconditional payment schedule. So they say, we're going to fix the amount, we're setting the amount, and now there's no longer conditions to the bill. That you will pay this, it's set, and it's known. If you take a look at the value of these bonds, these are the prices of these bonds, of the Dawes bonds and the Young bonds in the United States. And it's interesting that even though the Dawes bonds were initially sold at a discount, by the late 1920s, they're selling at a premium. The Young bonds, which has a lower coupon rate, always sells at a discount relative to the Dawes bonds. And as you can see, there's going to be a sharp drop in the price in the 1930s, and it will steadily decline. Though you'll note that these bonds, these loans to Germany, it's interesting, these loans to Germany continue to trade during World War II. The value, the price steadily declines, but they're trading at like 10, 15, 20 cents on the dollar during World War II, but they continue to trade in the United States even into World War II. But you can see that as part of our story, something's going to happen in the 1930s. So what is that something? Well, the stock market crashes in 1929, and US banks end up recalling their loans and halting credits to Germany. The US slips into a recession, it slips into a depression, but the depression in Germany and the rest of Europe is even much more severe than the depression in the United States. Most of these payments in this circular flow of loans to German payments to Britain and France, Britain and French payments to the US, most payments stop. Now, historians emphasize sort of this low productivity and low profitability of German industry, but they do argue, I mean, one thing to note is that total reparation payments from Germany between 1919 and 1931 amounted to less than 2% of all German national income. The real problem was it just simply could not continuously finance its current account deficit indefinitely. But reparation payments added only sort of marginally to these fundamental difficulties. In 1931, in order to sort of try to halt a financial crisis, and President Herbert Hoover, the United States, declares a moratorium on all payments from July 1st, 1931 to June 30th, 1932. Wall Street, not surprisingly, is very unhappy about this. They want to be repaid. France is also not happy, but this gains support from 15 nations by July 6th, that there's a moratorium on all payments, and they support it. Britain and France continue to make some additional payments to the United States during this period, partly to, well, they continue to make payments for reasons. And then in 1932, there's another conference in order to deal with these reparations. Representatives from Great Britain, Germany, and France attend this conference, and there's an agreement to suspend World War I reparation payments indefinitely. Hitler seizes power in 1933, and Germany defaults on the loans to the United States. It's interesting, the Dawes and the Young loans continue to trade. We showed that they traded in the US during World War II. They also continued to trade in London. You know, if you take a look at these loans, the Dawes loan continues to trade at a higher price than the Young loans, but they traded throughout the war. There was some hope of repayment possibly after the war, even though, you know, Germany had defaulted in the early 1930s. They continued to trade. No coupon payments weren't being made. If you look at 1932, when the end of the moratorium, or at the time of the default, who did Germany owe money to, you'll see that it's distributed widely across many nations, but it's largely to the United States. 40% of all German debts are to the U.S. Coming in next is the Netherlands and Switzerland, followed by Great Britain, and then many other nations as well. If we look at payments to the US Treasury on war debts from the Allies prior to January 1933, you'll see that, at the time of the moratorium, the US was owed, this is the US Treasury, was owed about $10 billion. Payments up to this point had been about $7 billion. Austria had barely repaid anything that they had owed the US Treasury. France had repaid, 3/4 or so of what they owed. Britain had paid about half of what they owed. I'm sorry, France had paid a small fraction of what they owed, only about 15% of what they owed. Great Britain had paid about half of what they owed. And overall, I'm sorry, I was looking at the wrong column. Overall, only about 27%. If we take a look here, only about 27% of what was in the total was owed had been repaid, leaving about 3/4 still to be repaid of what was owed the United States Treasury by allied nations. So one question that gets asked is, did the US actually pay reparations to Germany out of this whole process? By 1933, Germany had defaulted on essentially $2 billion in US loans. Depending on the source, Germany had sort of paid the US in various types of payments, about 450 million I'm sorry, about $415 million. I'm sorry, 415 marks. In dollars, that's $103 billion. I'm sorry, $103 million. Let me repeat this. Germany defaulted on nearly $2 billion in debt. Germany had repaid the US about $103 million, leaving about a net transfer of about $1.9 billion. So despite winning the war, after the war, the US transferred about $1.9 billion in resources to Germany. What's interesting is these debts were not forgotten. So the Great Depression occurs, no coupon payments are made. No payments are, of course, made during World War II. But after World War II, US troops occupy Germany, and Germany wants to re-enter. In order to rebuild Germany after World War II, Germany needs to re-enter international debt markets. But the US, Britain, and France are not going to let Germany re-enter international debt markets until these pre-war debts get settled. So there's a conference in 1953 and establishes the London Debt Agreement, in which there's a 50% markdown on the debt, and 50% markdown on the debt. So they say you still owe these debts. West Germany argues that they should not be obligated for all the debts; that some of those debts should be the responsibility of East Germany. The Allies agree, Britain and France and the United States agree. And so what's interesting is when the two Germanys reunite in October of 1990, the U.S. reminds Germany of this of their obligation, and Germany sets up for repayment with East Germany reuniting West Germany. These payments, they have to create a new set of repayments, and these final payments, the payment on these World War I debts continued up until just very recently on that. You'll see that these Dawes and Young loans, they stopped at some point. They stopped getting traded, and there's no prices. But you'll see they then, with the London Debt Agreements, they were traded again as these things were then repaid. This is a fascinating period of time in international finance. If you'd like to read more of this, let me recommend 3 books. So much of this lecture was based on the work of Stephen Schuker and his book. He's a historian, and his book, American Reparations to Germany, Implications for the Third World Debt. If you'd like a little livelier descriptions of this period, The Lords of Finance, which was a bestseller a few years ago, is a great book. The Lords of Finance, The Bankers Who Broke the World. And then another great book it's a little long, but it's a fine read. It's by Adam Tooze, called The Deluge, The Great War, America, and the Remaking of the Global Order. Thank you so much. That will conclude with that.